Good morning, everyone. My name is Tony Joy Candela. I'm the office manager with the HIA-LI. And on behalf of the HIA, I wanted to just welcome and bid everyone a good morning to HIA-LI's 27th Annual Economic Summit. We'd like to start off the program today by thanking our sponsors. Without their support, we would not be able to put on such progressive programming, such as this program for the Long Island business community, as well as for our members. So we have this morning's sponsors are our gold sponsors, PSG Long Island. We have our silver sponsors, People's Alliance Federal Credit Union, as well as Dime Community Bank. Our bronze sponsor, H2M Architects Engineers. And we have our sponsors, Farrell Fritz, PKF O'Connor Davies, as well as TriTech. So thank you again to all of our program sponsors. Next, we'd like to acknowledge our board of directors, many of whom are on the call with us today as panelists, as well as who are joining us for the call to listen in. Our board members play a critical role in moving our initiatives forward on a daily basis, and we truly appreciate all that they do in helping us to do so, and again, helping the business community at large. So thank you again to our board of directors. Next, I'd like to just encourage and invite everybody to join us at some of our upcoming programs. On the March 26th, we have our Trivia March Madness theme. So it's a sports theme, networking, and trivia that you'll get to have kind of concluding the end of your Friday from 4 to 5 p.m. And we've been doing these on a monthly basis. So we encourage you to join us, as well as on April 1st, we have our CEO Forum featuring Greg Galdi, who is the founder and president of Custom Computer Specialists, moderated by Rich Human, president and CEO of H2M Architects and Engineers, as well as our HIA-LI board chairman. And then we also have on Friday, April 23rd, our annual HIA-LI Long Island Innovation Park at Hauppauge update, current and future growth. So again, we strongly encourage you to join us for any of these upcoming programs. And hope to see you there. If you have any other questions, feel free to definitely reach out to the HIA-LI, and we'd be happy to help you. And just as a friendly reminder, we will be taking Q&A. So there is a button at the bottom of your screen that you'll be able to submit any questions that you have in regards to today's program. And our moderator will do the best that he can to be able to get to all the questions towards the end of the program today. So with that, I wanted to pass it over to HIA-LI President and CEO, Terry Lucy-Maselli.
Thanks so much, Tony Joy, and good morning, everyone. Hope you are staying well. On behalf of myself and our board chair, Rich Human, who is one of our esteemed panelists this morning, we welcome you. We've done this, the survey with, or interpreting the survey with AVZ and now PKF for the last several years, and it's probably more relevant than ever right through COVID to take the temperature of Long Island business. So, it's hard to believe that it is over a year ago, literally last Tuesday, that we saw the first COVID case. And it's been amazing. We've been so proud of you as HIA-LI members and our Long Island business community. You've pivoted so quickly, many of you reinventing your organizations to provide personal protection equipment, to help our members really understand how to gain capital, which is well needed right now and in the future. And we just want to thank you really for all of that. You've told us several things. That number one, obviously access to capital is critical right now, and particularly over the next several months. That technology is very important, as we learned to work, many of us remotely, and figure all of that out. Certainly creating a very, very viable talent pool is important. And for many of us, something new, which is really looking at how to deal with mental health issues as people are coming out of COVID, and understanding as leaders, we have to be much more compassionate about what is happening in the workplace. So we'll be talking about all of that. Know that the HIA-LI is here alongside you every single step of the way, really as a one-stop business resource for all of your needs. And we're delighted really to have this esteemed panel here, really to talk about and interpret this survey as it relates to their own industries. So I'm going to turn it over to Bob Corte, He is a partner at PKF O'Connor Davies. He's also our HIA-LI treasurer and one of our very valued board members. So Bob?
Good morning, Terry. Thank you so much. And good morning, everyone. As Terry said, my name is Bob Corte, and I'm a partner at PKF O'Connor Davies. I'm thrilled to be here this morning. Hard to believe we're celebrating our 27th anniversary of our Long Island Economic Survey. As many of you are aware, on January 1st, 2021, AVZ combined with PKF O'Connor Davies. The blending of our two firms has been amazing, and we are now in a position to offer greater value to our clients, greater value to our employees, and greater value to the communities in which we live and work. Joining the Long Island business community has been an aspiration of PKF O'Connor Davies for quite some time now, and AVZ offered them the greatest opportunity to accomplish this goal. It's very important to note, however, that even though our name has changed, we are still the same team of talented professionals working out of the same office, eager to serve and grow our presence in our region and beyond. On a personal note, I couldn't be happier to be associated with this award-winning firm. We at AVZ have always valued the culture that existed at our firm during our 70-plus years of operation. It was apparent from initial conversations that PKF and both firms aligned, that we both align culturally and that this would be a great fit. I encourage each of you to take a moment and visit pkfod.com and learn more about our history and capabilities. When AVZ began thinking about combining with another firm, it was particularly important for us to combine with an organization that was like-minded. From our very first conversations, we recognized the many fundamental similarities in the way we think, our philosophy towards business, and a mutual vision and mission on how we conduct that business. The survey is a perfect example of shared values. When I first mentioned it to Kevin Keene, the managing partner of PKFOD, hands down, without thinking about it, he said, let's do it. So right from the get-go, they saw great value in this endeavor and fully supported our annual survey, which we think is so important for the business community, not only locally, but even nationally. So I want to thank all of my partners at PKF for their continued support, and a special thanks to the HIA-LI for inviting us to present the results of our annual economic survey and to moderate this panel discussion. Special thanks to Terry Alicia Maselli and all of her HIA-LI staff for all that they do throughout the year for this region. And I must tell you that I work closely with Terry and I know Rich and Kevin and the board members, and it has been a challenging year for Terry and her staff. And I must say they've done a phenomenal job in this past year. And by no means, your work is not done, Terry and the board. We still have a ways to go. So kudos to you. There is no better advocate for all of us than the HIA-LI. And of course, the many people who put so much effort and work into making this survey possible each year. I'd like to thank Kerry Fontaine, Marketing Coordinator, Mike Albano, our survey creative designer, who really has done a fabulous job. I love the way the surveys come out. It's changed in the last couple of years. And I must say, I'm really pleased with the results. And last but not least, Annette Esposito, our Marketing Director. When we began this endeavor so many years ago, I don't think we ever anticipated the positive response we've received to this information over the years. To be here discussing the results with you as a new firm is truly gratifying. So I want to thank each and every one of you for your participation. Whether you simply answered the survey, made use of the data, or simply here to be part of our webinar, thank you again for your continued support. We are truly humbled by your friendship. I trust most of you, like me, are hoping that the 2022 HIA-LI Economic Survey will be in person. I, for one, cannot wait until we are able to gather together, share a meal, a story, or simply not be confined by these restrictions any longer. I certainly can tell you, and my golf game improved last year. I tell people because we couldn't do anything even on the weekends, no vacations. So I played every weekend, Saturday, Sunday, and my wife, I think, was so tired of seeing me, she'd say, go play, go for the day. So I ended up playing more than I did ever before, and Certainly it was enjoyable, but certainly I'd like to get back to a more normal life where we have a balance where socially and business-wise, we're able to converse with each other one-on-one. So now down to business. Each of you will be receiving a PDF copy of our survey once the webinar is over. It can also be accessed by visiting our website at pkfod.com. Also, in a few moments, I will be introducing our esteemed panel, but first I'd like to share some of the highlights from our survey. So here's a quick review of our results. And don't kill the messenger. Confidence in our local and national economy was impacted by a number of factors. But surprisingly, through it all, our respondents still saw some glimmers of light and hope in 2021. Some of the factors affecting our ratings, and let me just preface it by saying these surveys went out around October 1st and it ended by November 15th. So some of it you've got to cross over even with the presidential election. Some of the factors that I think affected our ratings, and it's certainly not all inclusive, global COVID-19 pandemic certainly at the top. The presidential election and a new administration. The systemic mistrust and civil unrest. And then the quarantine fatigue. As a result of these factors and so much more, confidence in the national economy decreased slightly to 6.7 from 7.2 in 2020. No surprise. Confidence in the Long Island economy, a little surprising. I look back at the 2008, 2009 when we were 4.9, 5.2. It actually came in at 6.5 versus 6.8 a year ago. So again, it certainly was impacted. I thought the ratings would be a little bit worse, but certainly it was affected by national, regional, and I'm sure a lot of personal issues that we all had. You know, Terry mentioned a little bit about the mental health and how people dealt with shelter in place. Certainly became very difficult. Of course, revenue is certainly an indication of how businesses fared throughout the unprecedented year. A decrease in revenue was experienced by 47% of respondents, and some growth was experienced by 42%, which was down from 69% last year. Again, no surprise to me. While unemployment remains high in 2020, 14% of firms increased headcount, significantly lower than the 46% we saw in 2019. And 25% of firms decreased headcount. This number is nearly double from the year before when it was a low of 13%. So a little perspective on unemployment in the Nassau-Suffolk region. In January of 2020, a little over a year ago, we were at 3.8%. We peaked at 13.8% in July of 2020, an increase of 10%. And today we're down, January 2021, 6.4%. So we've seen that roller coaster, and hopefully it continues to go down. But here's one of those glimmers of light I mentioned before. 93% of firms are either going to remain at current staffing levels or add to their workforce this year, which again, hopefully we see that unemployment continue to decrease. So did anyone get a raise last year? Well, a much greater number of employees experienced a decrease in salary, 11% in 2020 versus 2% in 2019. However, 16% of respondents gave out raises of 5% or more. And I'm not going to say that it was all at the beginning of the year, and some of it may have been sector or industry driven as well. But certainly, I don't know how many people feel. I still think it's a little difficult, even when unemployment rates were high, and maybe it's because people were getting that additional bonus from the federal government, but it was still difficult to find quality people that wanted to work. And even today, it's not that easy to find good people. For the fourth time in 5 years, no surprise, and I think you'll continue to see this based on the pandemic, healthcare continues to be the industry with the greatest potential for growth on Long Island. And we do have an expert in the healthcare industry on our panel today who will weigh in with much more information on this in just a few minutes. So here's a surprising and interesting statistic. We saw a 4% increase last year in the number of people who feel financially prepared to retire, 56 respondents versus 52% the year before. And I always go back to that phrase from Alan Greenspan, where he coined the phrase irrational exuberance. And I'm wondering, is this the sentiment that is factored into the respondents, thinking that the stock market gains has made it plausible for them to retire? Or is it just hopeful thinking? I'm not really sure. But I'm a little bit surprised that it ticked up. Not really certain why. Maybe people are just tired of working at this point, but hopefully they're prepared for retirement. Always worries me. Of course, financial losses due to COVID-19 is still a huge problem with our majority of our respondents, with 68% suffering either permanent or temporary financial damage. I can only tell you, Kevin O'Connor can appreciate this. We as accountants appreciated this when PPP came out, when the CARES Act came out, or the loans that were available, the work that was done to secure these loans for many of the businesses on Long Island and nationally, but certainly I'll deal with Long Island. And I think really it helped businesses keep employees employed. And in the end, I can only tell you by the end of the year, it really was the lifeblood that kept most of them viable going into 2021 and beyond. So I think that's important to note. There was a time when the federal government and the SBA was imploring many business owners to return those PPP funds in those first couple of weeks in May. Kevin, you probably remember that as well. And when clients came to me, I said, no, don't do that. You don't know what the economy and what your business will look like in 3 months, 6 months, 9 months. Do not do that. You'd always have the opportunity to convert that to a loan if need be, or return it later on. But I think, again, that's what sustained many of these businesses with those PPP loans and kept the unemployment from rising even beyond the rates that they were at. So really, what would you say so many businesses be right now if they weren't that payroll protection program? 58% of respondents receive relief from PPP. And finally, while 100% of respondents continued to work throughout the pandemic, 50% worked a combination of remotely and in the office. I cannot help but feel that this pandemic has changed the paradigm on how we will conduct business, even when we enter, and I hate that term new normal. I don't know what that means and what a new normal will be, but I think we will just slide into that naturally. I do know that a couple of our panelists who are involved in real estate perhaps they'll comment on this. And I'm thinking about the future impact of remote working. What is it going to have? What's the impact on commercial real estate occupancy and commercial real estate prices? So I'm curious to see what a few of them have to say. Our results booklet is full of useful information that comes directly from Long Island's business owners, those of you who are the very heartbeat of our business community. Again, feel free to contact Annette Esposito at PKFOD if you have any questions or if you would like hard copies of the results booklet. As mentioned, you will receive a PDF copy of our booklet post-event. Now it's my pleasure to introduce our esteemed panel. Bob Coughlin, Principal of Tritech. Wendy Darwell, President and CEO of Nassau-Suffolk Hospital Council. Of course, Rich Heumann, President and CEO of H2M Architects and Engineers, and also the HIA-LI Board Chairman. Kevin O'Connor, who deserves congratulations on the combination of BNB, now with Dime Community Bank, where Kevin will serve as CEO, and he is also an HIA-LI board member. And Dr. Christine Reardon, President of Adelphi University. Welcome, everyone. And now let's start the discussion. So we always start out, and this doesn't have to be a lengthy response from everyone, just maybe 2 minutes or less. You heard the survey results, national confidence rating going from 7.2 to 6.7, and Long Island from 6.8 to 6.5. Just let us know, and we can go right down the line. We'll start with you, Kevin. What is your confidence rating, both nationally and regionally, and why do you feel this way?
Well, I think obviously good morning and thank you. It has been certainly a challenging year, and it's good to be here. And I guess we discovered early on that this was probably the last live event we were all at last year. So again, Terry, great job, and your staff has done wonderful as part of this process. For me, I think I'd have to certainly be above a 7. There is a lot of money sloshing around the system. with what's gone on a federal level, whether you call PPP or even the most recent stimulus plan. There is tremendous pent-up demand as we get more and more positive information about the pandemic and COVID. It's hard to see we're not going to have. I mean, the Fed came out yesterday. They're not going to raise rates for another 2 years on both ends of the curve. The federal dollars that are flowing around. This will be, I think, a very busy summer if we are healthy. And so I know that even in your survey, people were optimistic back in November and December. And so now you're seeing you got 3 months better. We're more vaccinated than we thought we'd be. So I'm optimistic. Obviously, there are some long-term issues with some of this deficit spending, but I think certainly in the short term, we should be optimistic about what we're seeing.
Rich, your comments and thoughts?
Thanks, Bob and Terry. Great job as usual, and team, and good morning, everybody. I'm really aligned with Kevin. I feel as though my confidence has been growing since the last quarter of last year, and a lot of the sectors that we do business in, a number of them were really unaffected due to the pandemic, and I think when you couple that with the infusion of the latest rescue package, clearly municipalities, state and local governments, where their budgets were going to be was a major uncertainty, and the fact that New York State and Long Island municipalities are going to have their budgets restored for years in the future. I think money going to education is also a critical element of things going to help us kind of drive our economy locally. So I'm probably between a 7 and an 8. I think Long Island is much more stable economically than the country is nationally. I think there's going to continue to be national volatility. I think that's between our elected officials and the businesses on Long Island, I think there's a boatload of alignment and a lot of partnership, a lot of collaboration happening, and I think it bodes well for us here locally.
Thank you, Rich. Wendy, any thoughts, comments? Your rating?
Good morning. Certainly from the perspective of healthcare, all of that federal funding has been critical, not just the direct support for healthcare providers, but the state funding in particular. But I think I'm similarly confident to Rich and Kevin. I think what we have to be concerned about is whether we continue to see sustained growth beyond the rebound. Obviously, we're headed for a rebound now. We're seeing the light at the end of the tunnel with COVID, but what's the growth trajectory after that? So I feel really good about 21. We'll see about 22.
Thank you. Bob, your comments?
Sure. I would echo what the other panelists said. I think overall the economy is positioned well to grow quickly. There's a lot of pent-up demand, and as Kevin pointed out, there's a lot of cash sitting on the sidelines. Capital markets, there's no lack of cash available. However, I think it does depend on your perspective. I think there are going to be some serious winners and serious losers as we go through this. And the pandemic has, I think we've all recognized, rapidly accelerated trends that were already underway. People are working from home. There's less business travel, more video conferencing, home grocery shopping, online shopping, telemedicine. You can go down a list of lifestyle changes that weren't in place 15 months ago. And overall, it does feel like the economy has a lot of confidence, and people are excited that because we're sensing a turning of the corner in COVID, and we're all excited to get out there and go to restaurants and spend some money, travel. However, there's a large segment of our population that is not doing as well, and they don't feel as confident about the future. And for many of those people, the jobs that they had aren't coming back, right? They've changed with all those changes that I've mentioned, as technology has kind of accelerated these changes. And so we're the way I'm looking at it is, yeah, I think overall, I'm still in that 7 or 8 category for optimism and confidence. But the group that's not doing well is going to need some help and some support in going through this. And so I'm happy to see where the Fed's stepping up with this financial support. I think history tells us that change also always creates more jobs than it destroys, but it's a painful transition going from where we are to getting to that next step. And so I think we're going through a very good and healthy transition, but it's going to be painful for a large segment. And I think we have to keep that in mind I think we're all going to be doing well going forward on this call, but I think overall we have to kind of keep that in mind as well.
So you're optimistic, and as I always say, that cautious optimism.
It's a good way to look at it.
I mean, I like your thought. I mean, usually when there's a downturn, there's pent up demand and hopefully pent up spending that will occur, and that remains to be seen. The only other thing that concerns me is, aside from, and I think we will get through this with the vaccines, I believe, is they talk about tax increases and what's the impact going to be on that. And that's always a concern. I mean, we've laid out a lot of spending to help businesses, to help families, but the tax increases, I hope they're careful with that and don't stunt that growth. And Christine, your perspective and your feeling on the confidence rating.
Sure. So let me just piggyback a little bit on what Bob said. I represent higher education and nonprofits, and I think we comprise about 20% of business and employees on Long Island. And as Bob was mentioning, there are going to be some industries, nonprofits and higher education, that were hit extraordinarily hard during COVID and during the pandemic. So I do think that we're going to see slower recovery for some very specific businesses and industries. It's very different in being a nonprofit, I think, in higher ed than a for-profit company. And some of the same access to funds aren't available to various organizations within those industries. So similar to Bob, I probably would put it about a 7, but I do think that it's going to just be varied. And we have to really think about the different segments that exist on Long Island. There are going to be some that are going to be doing extraordinarily well and are going to rebound very quickly. When we look at higher education in general, we're predicting about a 2 to 4 year recovery period for all colleges and universities. And we've got 15 of them here on Long Island, and we're a big economic engine actually for both Long Island and the state of New York overall. So
Yeah.
I'd put it a little bit, probably 7 light.
Okay, 7, okay. I'll ask this question for all of you. I'd like to hear your comments. Certainly, aside from the logistics of working office, remote, what in your opinion is the biggest adjustment business owners have had to make to not only survive, but to succeed going forward over the last year? And I'll say last year and even, going forward. I think, Christine said it right. It's, several years out, we need to look. What do you think has been the biggest adjustment business owners have had to make? And Bob, I'll start with you, being in your sector.
When I look at that, I think there's so many changes that we've had to go through, and there have been just a constant barrage of information, some of it accurate, some of it inaccurate, and we've had to respond to all of that and make accommodations for safety and healthcare for our workers, and taking a look at where the capital markets are and the changes that are taking place in that. We're very dependent on capital markets. How the municipalities have reacted, and how we've all had to change to adapt to how they're reacting as well, where they weren't open or they're not online, or but I think if you just generalize it, the biggest accommodation is that we all have to get used to how rapidly change is taking place. The change is accelerated dramatically over the last year or so. All of the new lifestyle changes that I mentioned before, or business changes that we've had to accommodate. I think it's just it's becoming where our employees are the people that we work with are constantly having to keep up with, almost a daily addressing a different change in the marketplace. So I think change itself is the biggest change that we've had to deal with. Rapid change.
I would certainly agree with that. And in these times, one needs to be light on their feet and really be able to accept change. Rich, I'll go to you as well on that question.
Yeah, Bob, similar thoughts. I think that, our commitment to our employees is going to continue to be a priority. And, we've, with all the rapid change and the needs that our staff has and the balances that have been necessary between work and life, have all come to the forefront. And, if now there's an ability to work remotely and that's going to be a part of your business strategy moving forward, how do you optimize that? How do you balance the needs of your business with the needs of your employees? Employees that kept their jobs pretty much probably stayed put over 2020. But as things open up and opportunities present themselves, there's going to be opportunities for our employees to go to new places. So as an employer, if you're not really committed to your employees and making sure that they're going to be satisfied and have opportunities in your firm, you're going to lose them. So to me, that's going to be a priority for us. And I think for business in general, we need to make sure we stay focused on our employees.
Completely agreed with you. Kevin, I'll turn that question over to you. He's on mute. You're on mute. There you go.
Well, I had to do that at least once in this process. I think it's been said, flexibility, communications. I think we all went into this expecting it to be a 2 to 3 month, and now we're basically celebrating a 1-year anniversary. And we all have tried to figure out what it means when we bring everybody back. We can all give chapter or verse of the things that we're worried about, creating cultures, creating, educating our younger employees, creating an ability for them for upward mobility, but it's going to be different. And so I think we've spent a tremendous amount of our effort during this process in communication. And so it's, weekly, bi-weekly, and admitting we don't have a lot of the answers. I think this is one of those times as leaders of organizations when you can say there's so much noise, there's so much information on both sides of every argument that, I've felt myself with at some point in time 500 employees having almost a conversation or a debate where I'm not sure what the answer is, and expressing that to them because this has been such a challenging time. And so some of that I think has been good because I think we've created sort of a camaraderie within our organization. I'm sure, Rich, you've done the same thing. You feel like they're all partners with you in this process because we're all sort of evolving as we go through. But I do think that, this will be some level of new normal. People will not be here every day, but I think they do need some place to go. So as we talk about real estate values, I think to have sort of a fully remote organization is you don't have an organization if you're fully remote. We need to have a home. Our business is unique because we have separate locations, been open every day, and then we have a main office, and trying to make sure you balance those two dynamics. But I do think that we will still have offices where people need to go. They may just not come every day.
Kevin, I think a couple of things you said that we don't have the answers, and I'm thinking about even listening to the CDC and Fauci early on, and they didn't have the answers. They're trying to give us guidance, and I know I was sitting there saying they won't know this for 6 months, 12 months down the line until there's hindsight. So you're absolutely right that not everybody had the answers. We don't know what the landscape will look like even 3 months from now, let alone a year from now.
There's
and
a
I
great
do agree
article.
with, go ahead.
There was a great New York Times had an article today about sort of how we all approached it from maybe both sides of the aisle and how we all thought and how we reacted. And there's now a recognition both sides had a little bit wrong. And as we get together and understand that, that's going to make this better. So this has been a tremendous evolution. I think we can all admit on this phone call that we're a different person, that we're in a different company than we were a year ago.
Absolutely. And the other thing is, I do think there needs to be a balance, like you said, between remote and actual, in-person work. I think it's important. I saw it even from our employee perspective where we were shut down for a while. And I think people were anxious to get back to work. Just the social aspect of it, the collaboration, I think it's so important. I think I viewed us as zombies for a while. From mid-March until I'll say May 31st at least, we were zombies. People didn't know what to do. They were home. They didn't know how to act. I tell the story. I live on a wide horseshoe block that people like to walk. And I can't tell you the number of people walking up and down that block all day, and they look like zombies. People didn't know really how to conduct themselves in the middle of the day. Everybody was out of sorts. So I think getting back at least where people can come back to the office, either 50%, 25%, I think is important. I think it's important mentally and social, and the mental aspect. But I'll go back to the same question, Christine. You might have some input on that, the economic and social aspects of today from COVID-19.
Sure. So let me give you a little bit of perspective. I mean, as a university, we're obviously a mission-driven nonprofit, but I often say being a president of a university is both like being a CEO of a business as well as a mayor of a city. So for us, I'm a $250 million operation. I have more than 2,000 employees. I have 8,000 students. So 10,000 people were impacted immediately last year when we shut down due to COVID. At the same time, as we looked at restart, it's like opening a mini city. I have gyms, I have daycares, I have restaurants, I have hotels, I've got retail stores, I have transportation fleet, I have public safety, I've got a performing arts center, I've got a religious avenue. I had a $50 million construction project going on. I have athletics and sports teams. And I had to sign, I think, like 12 to 15 of those restart guidelines per the state. So for us, it really, there are two things I think that came out of this, both very positive. In fact, one is we truly had to innovate. We had to completely relook at every aspect of the university. And as we move forward, we know we're not going to boomerang and go back to exactly the way that we've done things in the past. And the second thing, though, is to restart a university. It is like a mini city. I couldn't have done it alone. It's not like just putting in guidelines of people coming into the office. You have to think about how are you going to operate your gym? How are you going to operate your dining halls? How are you going to operate your residence halls? And as a result of it, collaboration was extraordinary across our university and also among the universities and colleges here on Long Island, as well as within the state. First time in my career in higher education that I've seen so many universities come together to help each other restart and to really think through all the different angles, because it's not easy to open up a university again. And so I think those two things, the innovation as well as the collaboration, are two things that are going to continue for most universities as we move forward.
Good point. Wendy, I'd like you to comment, especially on the social side of this. I would think you have some thoughts.
So I run a small nonprofit organization. We have fewer than 20 employees. And to echo what others said, the technology part of this was pretty easy. The human part of it was really tough. And, had staff who loved working at home, others who hated it, doing things like hiring new employees and training new employees is something that has been a challenge for us, and I think is going to continue to be a challenge as we're in some sort of, hybrid situation. But what we've really been challenged with is not our trade association side, but our work as a service provider. We have grant programs where we assist consumers in enrolling in health insurance. And the reason that the state has these grants for people to do that is because a lot of times individuals just want to meet with someone one-on-one. They want to sit across the table from someone and work through their financial and health issues. And we've figured out ways to do that remotely, but it's not the same. And so I think that's something that continues to present a challenge going forward, how we do that safely. And some of you all have much more consumer-facing businesses than we do. But, for the long haul, I think we've got to figure out a way to make that work better, that's safe for our employees and safe for the community we serve.
Great. Thank you all. Wendy, stay unmuted. First
Okay.
question. Excuse me? I did. There are 3 vaccines currently available. What's your advice to someone seeking vaccination? Should they or shouldn't they? I mean, I hear some people say, I don't want any part of it. I know myself, I was going to wait at least 6 months and have, again, a little bit of hindsight. Does it matter which one they receive in your mind? And how do you feel the effort to get everyone who wishes to be vaccinated is going? There's a few questions in there.
Sure. Well, I'll start first by saying I am not a clinician, so I can't speak specifically to the clinical aspects, except to say, there has been an extraordinary number of eyes on this process and on the clinical trials. And it is fast. I understand that reasonable people have concerns about that, knowing that the arc for vaccine approval is usually a whole lot longer than the 6 months that we've just seen. That said, all of the evidence suggests that all three vaccines are safe. All three are highly effective at preventing serious illness and death. And really, this is the key to getting our economy back moving again. So we encourage everyone to get vaccinated as soon as they're eligible and able to do that. They are a little bit different, the vaccines that are on the market right now. There may be some biosciences folks on the line here, so I won't try to flub through the science of this, but Pfizer and Moderna use new technology. They use synthetic messenger RNA to deliver, to spur your immune system. Johnson & Johnson is more traditional, like other vaccines, but they have very similar clinical data when it comes to preventing serious illness and death. So, it's really so essential to our economy. It's essential to the hospitals. They can't get back to normal business either until we've got a significant percentage of the population that's vaccinated. In terms of how it's going, I think we all know that it has been challenging. There are a number of reasons for that. Just the sheer scale of this, the logistics that are required. Pfizer and Moderna in particular have this ultra cold storage requirement that makes it a lot more challenging to move the vaccines around and distribute them. We didn't have a lot of transparency about the allocations of vaccine, particularly early on, and we're sort of lunging from week to week, not knowing what vaccines were going to come to the state, in what numbers, who they were going to go to. So it was very challenging to try to plan doing vaccination clinics on basically a 5-day arc every single week. That's gotten better now. And we think in the next couple of weeks that we'll be at pretty much the peak production and allocation of vaccines, and that we're going to sustain that peak for some time. And that's why, for those of you who have been trying, you've seen a lot more availability of vaccination appointments in the last week or so. And I think we're probably only a number of weeks away from everybody really being eligible. So, at the heart of it really is just the supply and demand problem. There is enormous demand. There are limitations on production, which the federal government is trying hard to address now too. So I do think we'll see it getting better. But I would say, just to put it in context, this is a really unprecedented effort. We really haven't attempted anything like this as a nation, probably since the polio vaccine in the 50s. And with the polio vaccine, 98 million people got vaccinated over 8 years. It's been 12, almost 13 weeks since the first doses of Pfizer got out into the field, and 72 million people have already received at least one dose. So if I know that it's been very frustrating for people, but if you look at it in that context, we've gotten an awful lot done in a very short amount of time.
I would agree. I certainly agree. Christine, remote teaching. How do you think that has really worked? What are the pros and the cons? I know I have my opinions and I have my concerns, certainly on grade school through, grade school levels. How do you think, has it worked? What do you think the long-term impact will be if we end up with remote learning for any further extended period of time? What's worked and what hasn't, and what will the long-term impact be?
Yeah, it's a great question. So there's a couple of things to really consider, I think, in responding to that. One is, I think, just understanding that each person has a different learning style. And so some people are going to gravitate towards online classes and online learning much more easily than others who need things, who want to be in person. The other thing to consider is that there are some topics that easily lend themselves to remote learning and others that do not. So just to give you some concrete examples, when we went remote in March of 2020, we took more than 1,000 classes online in a span of a week. And it was particularly challenging for many of our science classes that were conducting labs, our hands-on classes like in art and dance. So I saw actually like Zoom videos of our, the chair of our dance department out in his lawn, videotaping a dance routine, and the students being in their kitchens, in their living rooms, in their bedrooms, following his lead. So, I think as we move forward, there is obviously a place for online learning. Most universities already have online programs and people sign up for those very specifically, but we'll often have duplicative classes. And so you might have a program that's in person and you might also have a program that's online. I think going forward, we'll continue to see more programs being online, but I also think that we are going to have to come back together, particularly for different fields, to teach in person. And then the other thing that we're also going to see a trend of is many of our students are now requesting that even if we do have in-person classes, that we have an option where they can Zoom in if they're sick. And I think from a public health standpoint, we're really looking at how we can do that, because we don't want students coming to class if they have the flu, or if we think that they have, COVID-19 or are sick in any way. And so in many cases, from a public health standpoint, it gives us a lot more flexibility in the classroom for our students. We took all of our classes now have that remote capability so that, a student could attend in person or online. And that's something that I think we'll see a lot more of going forward. I do think that for K through 12, having in-person classes is extraordinarily important just for the social components that everyone was talking about. As adults, we adapt, but for K through 12 and even for college students, having that social interaction is such a huge part of learning, and having that peer exchange and everything else. And so I do think I am a strong believer in in-person learning, but I also believe that there's a role for online learning.
Very good, thank you. Bob, I'm going to turn this over to you. I saw recently that, and we all heard about residential real estate prices going through the roof. I think over year, Suffolk County is up 22%, Nassau County up 21%. I don't know what's going to happen in the future, but perhaps you could shed a little light. What do you think is going to happen with commercial and residential real estate prices on Long Island in the next few years?
That's a big subject, but I would maybe break it down again into that winners and losers category. And you break down maybe the product types. Industrial is very, very strong right now. A lot of demand, a lot of the e-commerce, last mile distribution is chewing up space and putting demand on other sectors of industrial. So that's going to be going pretty good for a while. Retail, a mixed bag. I think we've all seen online shopping take a big chunk, and that trend is accelerated. And that's going to probably continue to accelerate. I saw a question on here. Somebody asked about, can we convert malls to housing? Yeah, I mean, that's an obvious change that could take place. Although there's also demand from the e-commerce group, the last mile group, to take up some of those big boxes space for distribution facilities as well. So I think you will see some change happening in the physical nature of retail going forward. Although the essential retail side, grocery stores, pharmacies, liquor stores, beauty parlors, and the like are probably going to remain in strong demand. Anything you'd find in a typical downtown neighborhood or walkable community is going to be strong as we come out of this. The entertainment-based retail will start coming back as COVID starts winding down. People are going to want to go back to restaurants and socialize more and more. So that has taken a tremendous hit, but I think that's going to start coming back, and you're going to see some new players enter the market. Some of those existing players or the previous players just didn't make it. Office space is also a mixed bag. Everybody's kind of touched on the need for office space a little bit, or many people have. I do believe there's going to be a demand for office space, although it's going to change. There are going to be remote workers. There's going to be less demand currently. There's probably a little bit of oversupply in the marketplace, particularly in the urban environments. Suburbia is when we have rollovers on leases, you're going to see changes for the use of that space. It's going to be more of a gathering spot and a meeting area, a place to build culture or to onboard employees or to bring in customers to meet them. But it's not going to be the traditional, everybody sits in a cubicle and works kind of in their own little space. So you're going to start seeing more creation on these bigger, more open gathering areas. And there's going to be certain physical aspects that'll change: air conditioning, airflow systems, safety protocols, and the like. Multifamily housing, there's almost an insatiable demand on Long Island. We've seen, depending on the studies you look at, it's anywhere from 90 to 150,000 units will be needed over the next 10 years or so. We're producing about 800 to 2,000 a year, and we're already undersupplied. We have about 20% of our housing stock is multifamily, where the national average is about 35%. And if you look at Northern Jersey or Westchester, that's about 40%. So our competitive geographic neighbors are they're doing more than we are to accommodate different alternative changes in our demographics. Our demographics have changed dramatically over the last 30 or 40 years. We went from the traditional 50% of our households having what you would say a traditional family of a married couple with children to that they're predicting by 2025, a few years from now, to be about 10% of our population. So that housing demand, the need for the type of housing changes dramatically with that. But our average housing stock is over 40 years old. It's about 75, 80% of our housing stock is over 40 years old on Long Island. So there's going to be a big pent up demand for change happening. We don't have a lot of space left on Long Island to develop large tracts of single family homes. So the supply is there's not going to be a tremendous supply coming online for that. The demand may go down a little bit, but because supply is not going to be increasing, I see actually just a steady growth. We're not going to have the rapid increase that we've had over the last year with people migrating out of the city and running up prices. But I do think you're going to see a continued demand and more closely aligned with inflation than an increase in just a tremendous amount of demand coming in. So overall, I think we're looking good as an industry, but there will be winners and losers within that industry. The hotel industry has really gotten hit hard, but that'll be coming back as well. Just be new players that's more of a financial engineering process right now than a supply demand issue, say a year from now. So, but the retail will change.
It's a little interesting to me. It seems like a lot of the building has been 55 and over communities, and they seem to be getting filled up. So somebody's there buying the houses that they're selling. And I wonder if that pipeline will continue. Perhaps it is. That's what you're thinking.
Our demographics, are not, they're trending older, right? So we do have a smaller population in children. Our birth rate is down about 20%, and our population is decreasing slightly, but it's actually that age that curve is moving up to the older generation. So we are going to have more and more people in that 55 and older category qualifying that. We also found as people moving out of the city buying houses that people didn't necessarily want to leave Long Island. So they'd sell their house with whatever their tax structure is right now, and it's very high on Long Island, and they'd wind up renting locally, which put increased demand on the rental market as well. So there's been a switch going on.
Thank you. Rich, I'll turn this one to you. What changes has the engineering industry had to make to thrive or survive during the pandemic? And how does H2M remain competitive in a COVID-19 world?
So I think, by the nature of what we do, we help our clients solve problems. And we had a lot of that to do as the pandemic hit. When everybody scattered and went to their corners and recoiled, and the uncertainty was through the roof, you had municipal buildings that really were not going to become occupied until there was certain safety precautions put in place, and all the guidance coming from the federal government and even from New York State that people knew they needed to comply, and then some, because you had the guidance that was coming from government. You also had the sense of what was going to make people feel safe. So we we identified a team of people internally, just to kind of scour technology, what's available from, portable UV disinfection systems that could go into spaces to, creating, flow pathways within existing spaces and helping our clients, kind of remodel their interiors. Restaurants, you had restaurants who were going to have no indoor dining and needed to be now fully committed to, curbside pickup. How did they go about doing that? So for us, it was, especially early on, very much about what do we need to do to help our customers, as opposed to, what is the engineering and the architectural industry going to look like moving forward. So, and that still has kind of continued to be the focus, to the point of everything we're talking about. Engineering and architecture has a role in all of this. If it is going to be repurposing commercial spaces, what is that going to look like? How do you go about doing that? How do you work on issues of zoning and issues of permitting? And I see us, moving forward, this year as things continue to evolve, that we're going to have a place in there, being supportive of the various industries that engineering and architecture support. From a business side, we're still going to be, kind of fighting for talent. I think that, we were one of the fortunate industries to be able to sustain ourselves through the last year. And as a lot of the pent up demand becomes available, then, we're going to have the need of increased staff who are, trained and developed and ready to do, work for, various industries. So I see that as being, kind of a parallel commitment for us, is to make sure that we have the talent available when the opportunities come up. So, and for the better part of 2021, I think that's going to be a lot of what we're going to be working on is helping our clients, kind of get through all the changes that are going to be happening.
Great. Thank you, Rich. I'd like to remind everyone that if you have any questions, there is a Q&A that you can tap into. I happen to enjoy moderating because I get to ask the questions that I want to hear the answers to. So, but if anybody has any of their own, please feel free to type them in and we will address them. One thing, Kevin, I'll turn this to you. The minimum wage going to $15 an hour. I know I have strong feelings about it. I'm just wondering, what do you think the impact would be on the Long Island workforce and the economy if, we had to go to $15 right away? And once you do that, then you're going to 16 and 17 and so on.
Obviously, it's not just at the $15 range. There's inflation all the way up through the curve, and I think that's what people need to understand. I think we're all going to see, as we get back to out in restaurants, and we're going to see less people working in some of these places because of it. They'll reinvent themselves, or they'll have to re-engineer their businesses, but there's going to be less people hired the more you raise that up. And then as you get involved in the healthcare industry, because some of your employees are not at the minimum wage, but up at a level just above that will have to be raised. So I do think that is a concern as we head into this or head out of this, that you can't go so quickly on that.
I would agree with you on that. Absolutely.
We all experience, some of our high school, friends with high school children, getting a job is a challenge today.
Correct. I agree. Christine, I know that many of the colleges depend on foreign exchange student enrollment. And obviously that is dried up, correct? I don't even know if any of them are able to work remote, tap in remotely. But what has the impact really been to the higher education institutions on Long Island, and how do you deal with that?
Yeah, it's a great point, Bob. Definitely international students are part of the fabric of every university and college across the United States. It's just, we're multicultural just by design. And so when the pandemic hit, two things happened. Many of the students that were planning on coming over to start the programs were not able to come over, both for travel restrictions as well as unable to get visas, even when travel restrictions started opening up in some countries. And then the second thing that happened is many students who were here were unable to go home. And so, we worked a lot in terms of helping our students shelter in place and receive the care that they needed when they were so far away from their families during a global pandemic. As you can imagine, being parents, they were really concerned about their students being in the United States particularly when rates were going up in the state of New York. Going forward, the universities and colleges are working a lot together across the United States to do kind of some federal lobbying to really see if we can't get the consulates to open up in many of the countries that do send students to the United States. But I do think it's going to be a multi-year impact. So, there were some trends that were already hitting universities. The 18 to 22-year-old college student demographic is dropping, but we also know the adult market is really starting to explode. And as we really think about the changes that are needed in industries going forward, Bob had said it earlier, we're going to be needing employees to upskill or reskill. And so I think what a lot of universities are doing are looking at adding programs that will be appealing to the adult market, certificate programs, credentialing programs, continuing education types of programs. And it's really kind of diversifying the student body that you're really tapping into. So, as we look forward, it's just another lesson. You never should rely on one particular type of student, because as you look at the demographics over time, they do shift, and kind of go in a cyclical type of a pattern. So we are hoping our international students are able to start coming back to the United States. But in the meantime, most universities have pivoted to looking towards what I would call the non-traditional students and different types of programs that we can offer that align really with the economic development of the state as well as the region.
I think in the long run, that'll be strengthen the educational institutions for the future. It's like you said, you can't put all your eggs in one basket. You need to diversify where your student population comes from and how you get that student population. So I think you're right on target. Bob, we've seen Amazon certainly has been in the news a few times a year or two ago in Long Island City with IDA support and state support. Now they're in the news again a little bit with Zero Wire. What is your thoughts? Why is IDA, if you think it is, why is IDA support so important to economic growth in our region?
The IDAs play a critical role in development of many of the projects here on Long Island. So IDAs were originally set up with the idea of economic development or supporting job creation for industrial companies and industrial projects. And somewhere about, say, 10 to 15 years ago, the IDA started recognizing that in order to attract and keep companies, they needed to have a strong workforce and talented workforce that we have here on the island. So the IDA started focusing on a broader spectrum of projects to support, which included multifamily housing, office space, and the like, where they could have a young, talented workforce come in and attract and keep them here. Because of our high cost of living, our taxes structure here, the commercial projects that you see, the multifamily projects you see, just about every one that you see going up right now has to have support of an IDA program, the benefits. And, I think there's some type of misnomer, like the Amazon project is a great example, right? That they were going to be increasing their taxes by $30 billion over 10 years. The state was deferring or abating $3 billion of that $30 billion. There was going to be a net $27 billion in taxes coming to New York State. And it was mischaracterized that the state of New York was giving a handout to Amazon. It was not a handout. No one was writing a check to Amazon to come here. Amazon was writing less of a check than they would have, but certainly a much greater check than what others would be paying for that property. In addition to creating 25,000 new jobs at an average of $150,000 a year in salary and all of the spin-off effects from that. So I think there needs to be a better education process of exactly how IDAs work. They're not writing a check. They're not giving anybody money. They are deferring a portion of the incremental increase in taxes for the most part that would otherwise be being paid on that project. And without that support, you're not going to attract the capital. The banks and the private investors are not going to be investing capital because they're not going to be able to achieve the return they need. And capital is very fluid. Those banks and investors can invest in a project in Florida or Texas or California or China as easy as they can on Long Island. So if you're not able to hit that certain return hurdle, you're not going to be able to attract the capital. So I think there needs to be a better education process by everybody involved, that no one's writing a check from the IDA to give a handout to a wealthy developer. They're making it so that it's financially feasible for the project to get done and attract the capital to Long Island instead of going somewhere else.
So did anybody find that $5 billion pot of money for the Long Island City project for Amazon? I still looking for it.
I mean, it was, again, it was a mischaracterization.
I know that.
It was really a poor PR rollout, I think, that ultimately led to that. But
Yeah, it was terrible. And I think you make a good point that yes, there is some tax savings, but in the long run, they're going to pay tax dollars. They're going to create jobs. It helps. It's got to help the economy.
the job creation part I didn't mention, but I mean, it's significant. Each one of these projects that we're building are hundreds and hundreds, 600, 700, 800 employees per job are being hired. And then the ongoing spin-off effect of that project we're doing, we're just going to start in a couple of months, and Bayshore just comes to mind. $13 billion in annual discretionary income being spent from the residents of that project in Islip. I mean, that's in addition to the tax benefits, in addition to the job creation. In addition to that, these projects all create, the surrounding properties all increase in value as a result of proximity to these new projects. And over time, their assessed value goes up, and it actually creates a higher tax base for the overall community. And that's starting to get documented. Regional Planning Association has done some good work on that, and others. I know the Stony Brook Institute and REI has done put out some white papers on that. And I think it's important to get that word out there, that these are economic development drivers. They're in beyond their immediate impact that they themselves provide.
Great. Thank you, Bob. Wendy, what role should the government play in providing Americans with health care? And what role should the marketplace play?
Well, we have for, let's say, 55 years or so now had significant government intervention in healthcare with respect to Medicare. And that's really where you traditionally see government step in, where the pure marketplace is not able to meet the needs of consumers. It would not be financially feasible for the elderly and disabled to pay what market prices would be for health insurance, right? Healthcare is expensive. It's expensive for a lot of reasons, but primarily driven by technology and innovation. We all as consumers want the best quality care that's available out there. We are seeing some more encroachment on that. Certainly the Affordable Care Act did, in trying to fill what has become a growing gap. Fewer and fewer people have employer-provided health insurance, and the cost of health insurance at market rates is too expensive for a significant percentage of our population. I think where the Affordable Care Act really failed is that most consumers didn't understand that what was available to them for purchasing health insurance through the exchanges with subsidies was actually a pretty good deal compared to what it would cost to go out and get health insurance on your own. So, we've got this continued push and pull here. From the provider perspective, though, the flip side of that is, too much market intervention, too much government intervention in the market really alters our dynamics. When you look at the reimbursement rates, Medicare reimburses providers at about 95% of their cost. Medicaid reimburses providers at 67 cents on the dollar. So as the percentage of patients who are covered by Medicare and Medicaid grows, that means that providers have to shift more costs to commercial insurance plans, which means more cost to all of you as employers, or they're going to go bankrupt. And there's a crisis point there that we're starting to see with safety net hospitals, those that care for a very high percentage of low income and elderly and uninsured patients who don't have that commercial base to offset. They're really struggling. They were struggling before the pandemic. They're struggling even more so now. The other thing we have to keep an eye on here, though, and be cognizant of, is the role of the middleman, which is the insurer. I can assure you, as employers, when you are seeing your premiums go up 10 or 15%, it's not because providers are seeing their reimbursements go up 10 or 15%. Maybe you're getting 1, 2, 3% increases, a couple of percentage points at best. So, there's an important role for the commercial health insurance plans in incentivizing preventive care, conducting utilization review to make sure that unnecessary services aren't getting utilized. But at the end of the day, their business model, now that nearly all of them are for-profit corporations, is to return profits to their shareholders. So they've got, an incentive to keep as much of that premium dollar as possible. When we've got such tight market margins for healthcare providers and less flexibility in terms of your payer mix, that gets a lot more complicated.
Got it. Thank you very much. Rich, I'll turn this question to you. Certainly a lot in the news about green energy and sustainable. I guess really just worried about the economy, as it relates to green energy. So how is Long Island competitive enough in the green energy and sustainability areas of it as it relates to engineering, and if so, how?
Great point, Bob. I think that renewables and just a transformation in the energy sector is going to be a primary element. I think nationally it's going to be a priority, but it's also going to be a priority here. Interestingly, in terms of wind energy, Long Island is the premier location in the nation for wind energy. And we have, 4 active initiatives right now, from Brooklyn, to the East End of the development of wind energy. And, but I think how we go about our understanding of energy and our needs and how you kind of dissect the pieces of that is important because, there's combustion and, gasoline and vehicles and, what is that market going to look like moving forward? Right now, nationally, I think, 1% of the vehicles on the road are electric cars or hybrids. So there's clearly going to be a major shift that way. And in terms of power generation, you're not going to be able to completely shift to renewables. There's going to have to be the right kind of balance. So at the same time, we need to invest in renewable energy sources. We also need to, upgrade our fossil fuel plants, our natural gas plants. They can be made cleaner, they can be made more efficient, more effective. And I think it's really important for us, not to consider, kicking infrastructure out the door because it happens to be, utilizing fossil fuel. There needs to be, like anything else, the right kind of balance so that we have diversity in our energy sources. So, and I can see, Long Island being a leading region in terms of, commitment to renewables and kind of finding the right kind of balance. The technology isn't new. So even though, commitments might be newer, the technology is not new. The ability to support the movement to renewable energy is not new. I think that as developers come in to look for opportunities to create some more renewable energy sources, the ability to support that exists here. So I see tremendous opportunity there for us as a region. And I think the economy is really going to benefit from how we're committing ourselves to renewable energies.
Rich, there was a question that came in from the audience. They're hearing about a big uptick in interest in the wind energy technology. How close do you think we are to starting any of those projects? Like you said, I think Long Island would be ideal. And you know better than I whether you do them 10 miles offshore, which really, and I don't think they're obtrusive even when I see them, when I go to different areas. How close do you think we are to that?
We're there. We're there now. There are commitments that are on the books. The state has gone through multiple RFP processes and awarded projects. There's so much to be done to get through the environmental assessments and the permitting processes. But you've got the global leaders in wind energy are here on Long Island right now. So the timing, we're probably maybe 2 or 3 years out from seeing our first wind turbine farms going into service and starting to provide energy for us. But for sure, this decade we'll probably have 3 to 4 major wind farms somewhere in our region. So it's here and it's moving.
Very good, thank you. Bob, this may be for you, but anyone could chime in. Another question from the audience. Will the downtown revival efforts strengthen when people can be face to face again?
Yeah, I think that was, again, that was another trend that had been happening before the pandemic started. And I think you'll see a surge in that after, as we're turning the corner, more and more people are going to want to visit restaurants and socialize. But I think from a lifestyle perspective, you're also seeing it, some of the trends that, I'd mentioned before about the change in the demographics and the housing stock, or the makeup of households is kind of driving that trend also, where people want to get into walkable communities. So, and we're finding that the same thing that people in their 20s want, people that are over 55 want. They want to be able to walk to a restaurant. They want to be able to walk to mass transportation if they can. They may not actually go to the city, but they want to have access to the city. They want to be, fitness facilities, coffee shops. They want to socialize. They want to close the door on the weekends and go away. They don't want the taxes that they're currently paying. So we're finding, this kind of demographic shift towards a desire for a different type of housing stock than we currently have. And a lot of that is revolving around these downtown walkable communities. So yes, I think there's going to be a continued and escalating demand for downtown walkable communities.
Great, thank you, Bob. Christine, I'm going to turn this question to you because this is always one that I'm curious about, and I'm not sure that there's enough collaboration as there should be between business owners and the skill sets they need to fill positions, and I'll say the education curriculum of the colleges. I'm probably a little critical, although I have to say I don't necessarily know what Delphi is doing in that regard, but to me, I think it's extremely important that there be that communication and collaboration so the universities can have the academic programs that to fill the skill sets that business owners need.
Yeah, I couldn't agree more with you, Bob. Actually, before this webinar, I was looking through the New York State projections of employment for both Long Island as well as for the state. We actually look at that once a year as a university to look at the types of jobs that are increasing and then the types of programs that we may either want to add or how we adapt our current programs. Most of our colleges and schools now are putting in place advisory boards of people within their areas. We do know as we start projecting out to 2025, 2026, we're seeing tremendous shifting in some industries. Healthcare, I know Wendy could speak to this all day long, but we see a lot of different jobs in healthcare, a greater need for social workers. We've got a lot in the technology field, a lot in the finance, the marketing technology, fintech. So we do actually, I can't say this for all universities, but at Adelphi, we do very actively look at the employment data and projections around that for Long Island and New York, and then try to align our programs, not only degree programs, but as I mentioned before, as we're adding these credential programs and certificate programs. It's really targeted towards some of these fast growing industries. One of the things that universities and colleges generally don't get into, but is still a big gap, is what I would call the non-white collar work. So blue collar work, trades work, and that sort of thing. We're seeing also a big trend across the United States and here in New York for greater skilled labor that, are things that universities don't necessarily engage in. But I do think that there's a lot of opportunity for businesses to partner with universities and to come in and ask for either customized programs or, even talk with universities about types of programs and employees that they would like to engage with. We always ask companies to come in and partner with us on an internship type of a program, and then we can help provide them with a pathway of employees. So it's always a win-win when companies, engage with us at a university.
Very good. Thank you. Kevin, certainly, AVZ, we combined with PKFOD. We did it for various reasons, including a lot of the internal resources and really resources for our clients. Why did BNB merge with Dime? And we've seen a few other bank mergers as well. And I'm not sure we're done necessarily with that, but what was the impetus?
I think I appreciate the question, because as I was listening to you describe what you went through on January 1st, we went through on February 1st, and the exercise to get there was also a year. We looked at our organization and saw that while we had been successful doing what we were doing, and Dime was successful in their own right, putting together these two strong organizations that had a similar culture, a focus on the customers, a focus on the markets we serve, and recognize together we could accomplish more than we could be apart. And so for us to put this together, there's obviously the economies of scale, the ability to invest in newer technology, because as this has occurred this year, we've had to become much more digital than we ever were. This makes us as a size and scale, a branch network, because people still do need some level of location and branch that does span Long Island, $1 billion of capital. Again, sort of that same focus on relationships and customers. And I think it's a testament to the two organizations that, in the course of this year and with the newest round, we've done almost a little over actually $2 billion of PPP loans. That's really, sort of helped keep a lot of people afloat. And we did it because, the relationships that we had with firms like yourself and attorneys and things like that. And so we look at this was a great opportunity to put two like-minded institutions together, spent the time really at the top of the house and all the way through. And I think we're stronger now. And I think to serve Long Island companies are getting bigger. I think if you look at your survey, it keeps ticking up the number of employees Long Island companies have. And so we need in our size and scale to be able to keep up with that. And we also think there's tremendous opportunities through even the mergers and consolidations of larger organizations that business falls to us. So this was an exciting year. We still have some more things to get done in a conversion standpoint, but like you, we think that the organization is stronger going forward than it was alone.
Thank you. I'm going to open this one up to anyone who wants, and if everybody wants to answer it. Certainly the pandemic, you heard a lot of stories of young folks, whether, again, they were away at college or now had a shelter in place, came home under mom and dad's roof. And the one thing we always talk about is, how do we keep the youth from leaving Long Island? Well, they came home during the pandemic. Are they interested in staying? Or do you think there'll be a completely new dynamic that they'll say, I've got to go out and experience something new and leave Long Island and try a whole different road? I can't say that I truly have an opinion on that. I'd just be curious to hear what everyone's perspective might be who would like to chime in. Anybody?
I'll jump in. So obviously, I manage that population every day. And what we saw was, I think when public safety was at its highest risk, I think many students and young people that age felt safer by being with their family and friends and creating that pod. And because you can't go out and do all the normal social things, that being with their families and friends at that particular moment was something that they desired. I do think as we move forward, they're continuing to look for ways to break away. We did have a number of students who wanted to come back and, be a part of a campus life. I actually have two young adult children that fall into that category as well. But Bob said it earlier, the biggest thing for us to be able to keep students here or to keep our young adults here is affordable housing. You know, I think that they came home because it saved money, and now that they want to kind of go back out, they're going to be going out, but they're going to be seeking something that is affordable. So for me, the number one thing that we can do to retain our young adults on Long Island is to create more affordable housing. And I can tell you that there are a lot of people who would enjoy moving out of their moms and dads' homes into something that, you know, they can engage in adult life with their friends. So
Thank you. Anyone else want to chime in?
I would agree to that. I mean, I have 4 daughters, and 2 of them were living in Manhattan, one's in Houston, and one's here on Long Island. And I was hoping they'd come back to Long Island. Well, they all came back during the pandemic, and you know, they're married, one's engaged, and where they could not leave Manhattan before because of their nature of their business, they had to be there for various reasons. None of them have to be there anymore, you know, and so they recognize, hey, they're just starting families, and Long Island they find to be a great environment to start a family on. So they're one recently purchased, actually 2 of them recently purchased homes within the last few months out here. So within the last year, they both purchased homes. So I have 3 where I used to have 1 living here, and the 4th one is actually moving back to Long Island as well. She's a teacher, and she's going to try and get a job here on the island. So I'm actually seeing it, you know, where they like it here. They'd love to be here, to Christine's point, if they can afford to be here. And I think, you know, it's incumbent upon us, in which, you know, no one's really touched on, but the tax structure. And I am concerned about the current environment in Albany particularly, and the tax structure for New York State. I am less concerned about the federal tax structure because that impacts everybody. But from a competitive perspective for Long Island, for us to be raising taxes could be very detrimental to us. And I think we're headed in that direction, unfortunately. As we raise taxes, that puts pressure on our young population, but it also encourages our wealthier population to leave, and which spreads the increase of the taxes on the rest of us that are here. So I'm hopeful that, you know, others in Albany see it the way I see it, but the more we increase the cost structure, the harder it is going to be to retain it. And housing is a very big component of that. Taxes is another component of that.
Thank you, Bob. And congratulations. I'm glad to hear that you're 3 of you are going to stay on Long Island. I'm sure the parents are very pleased. We've got about 2 minutes if anyone else wanted to chime in. Otherwise, I will close the program and turn it over to Tony Joy. Anyone else want to make a last minute comment? No, we're good. Well, I'd like to thank all of you for joining and being part of the panel. I'd like to thank HIA-LI for hosting this event. I always enjoy it. I think the information that you panelists gave all the audience was really, really fabulous. Thank you very much. Tony Joy, I'll turn it over to you. Thank you.
Great. Thanks so much, Bob. And again, thank you so much for doing a fabulous job this morning, moderating as you always do for each and every one of our economic summits. And then I also, again, wanted to thank all of our panelists this morning for joining us, for taking the time to share your wonderful insight, you know, from each of your industries, and kind of giving a little bit of that optimistic, hopefully, foresight on you know, the economy and what we have ahead. So again, just thank you all for joining us, and thank you to our attendees as well for joining us this morning. Again, I just want to thank everyone, and I hope everyone has a great day, and please join us for one of our next upcoming programs. Thank you again all.
Thank you.
Bye. Thank you.